Our charters joining in. We've got Nooresh Merani as well as Kush Bohra joining in. Good to have you both on board. Holding on to the 19,050 mark by the skin of our teeth, Nooresh, it seems. And it's been what can be described as a pretty choppy and volatile week. Given the fact that now there are concerns of the S&P 500 entering the correction zone, are we worried of some sort of a further fall for our own markets?
So as of now, we are still around that area where we've not seen a sharp cut after the breakdown. So in this case, what do? Is we wait out for a new range being formed. So we broke below that 19,300 mark, which was a support. After that, the next support band is major support band is around that 18,800 and then 18,500 levels. So we made a recovery from those levels on the previous day. So out here, there is a good possibility we could get into a new range, but 19,200, 300 would be tough to cross. Same way on the downside, 18,800, 850 becomes a support, which is important. If that breaks, we could see another 200, 300 points on the lower end. So for now, the trend has changed. We've broken the swing lows. So in this case, let the markets form a range, trade lesser relative to normal size. So as of now, because we've not seen a similar cut happening in the mid cap or the small cap indices. So if you look at the discrepancy in terms of where we are in the various indices, so you have Nifty around the 200-day moving average, Bank Nifty below the 200-day moving average. Then if you look at the mid cap and the small cap indices, they are closer to their 50-day moving average. Even in terms of sectors, you have auto, which is above the 50-day moving average. So there is a lot of divergence. So the momentum is not that strong on the downside, but we've broken the lows, the recent swing lows. So for now, expecting range bound moves, time to be a lesser on the trading side, reduce trading size and wait it out, let it form a new range.
Right, okay. Kush, let's get in a word on the small and mid caps, considering they were the more battered and bruised ones. What's the likelihood that maybe the rebound will continue from Friday, or we could even test the Thursday lows?
So, hi, Ayesha. First up, very good morning to you, all the viewers, and thank you for having me on the show. Well, I sort of agree with Nooresh here that, Nifty Bank Nifty perhaps is in a no trade zone, or if you really want to trade Nifty Bank Nifty, you could perhaps have a lighter position. Mid cap index, on the other hand, is a very different setup altogether. If I look at the fall on the index, it started from 41,500 odd kind of levels. Even now, for the year, we are close to about 20% up. So definitely there is strength, in this space. Even on Friday, we saw a very sharp rebound in, a lot of select names. So I think this momentum could continue. This could now very well become a stock pickers, market, since the indices will perhaps, be either consolidating or have a slight negative bias given the geopolitical issues and everything that's going on in the US right now. So this will become a stock pickers market. For me, mid cap is the space to be, and I will have a lot of stocks on my radar if I'm actually looking for buying opportunities. Mid cap is where I will actually try and hide, or if not, look for more money making opportunities. So certainly Nifty Bank Nifty is something that's in a no trade zone, and mid cap is where all the action will be going forward, at least for the next 2 to 3 weeks.